Let's welcome Gene Munster. He is the founder and managing partner of Loup Ventures. And Gene, people will look at this and say, hey, we're 30% off the highs for the NASDAQ, so tech stocks must be cheap. You say not necessarily.
That's exactly right, Becky. This is not rocket science. The conversation is going to shift. You just had in your previous segment talking about productivity numbers. We are focused on Fed commentary, on the Fed interest rate. All of that has been kind of the vortex that we've been orbiting around over the last 9 months, but I suspect a shift in the next few weeks, the next few months, to a focus on earnings. And as we look to next year, the S&P, as you mentioned, is looking for earnings growth, 4% earnings growth, which begs the question, if we are going into a recession, what is going to happen to earnings? And you can pick your degree of a recession. If we assume there's no recession, then 4% is probably right. The market's got this right. If we assume a mild recession, it's probably flat to down slightly, which ultimately gets us to a point which is, I think, just the reason why this is straightforward, is if earnings are coming down for 2023, will stocks go up? And the answer is probably not. They probably will continue to go down. Our fund has been largely in cash. We're 45% in cash. What keeps me up at night is missing a big rally here, just getting this wrong. But I think you don't need to overthink this. I think we should sit tight, wait for some of these earnings to come down, and then ultimately you probably want to buy the market when these earnings have come down, once that adjustment has come down. And just a final thought on this, Becky, is the timing on this. Like, when is the bottom of the market? That's the question that I keep asking myself. And it could be tomorrow if ultimately these numbers come down quickly, if the market quickly adjusts for 2023 earnings down. But if it takes the market 3-6 months to make that adjustment, then we're probably going to be sit in this funky to down period for a while.
How much further down would it have to come? I mean, I guess I'm asking, what's your base case? Are we looking at a recession next year? How deep of a recession? And as a result, how much of a drop would it need to be before you think, okay, this is it?
I think it's going to be a mild recession, and that still implies that earnings need to come down. And as I mentioned, +4 is where the S&P is at, assuming that it's down slightly. So then how does that impact the market? I think that we still have another 10% downside to a lot of these tech companies. And even some of the best ones, I think, are going to go down. I don't think it's any commentary about the strength of these companies, but they're probably going down if, in fact, the numbers are going down. So I think that's the central question. The specific question that you're asking, I think there's probably 10% downside here.